Hey, Dan Passarelli here. Well, it sure is always nice when we have an update. Now, before we get to that, man, coming into Monday, I was still pretty worried about this whole Iran thing. I was worried about, obviously the safety of human lives and such and security of our country and others. But I'm always thinking about the market in addition to other things. And that's what I talked to you about. So I was concerned that that could drag the market lower, which, it really didn't. And today it looks like things are actually winding up pretty amicable, is the last I read. And so that gave some buoyancy to the market, and we gapped up higher. The S&P 500 closed up 1.1% higher on the day, though it was up even a little bit more than that earlier. But another thing is also at play here, especially as the Iran thing, if it does wrap up, this next thing will be the only thing at play. So here's what's at play. What Trump calls the big, beautiful bill. So this is a big piece of legislation with a whole bunch of things in it. And one of the most notable parts of it is a massive increase in government spending. So that is the government, and lowering taxes. So where's that money come from? Well, they print it. Okay, so it's just money that appears kind of basically out of nowhere. That's a whole big long discussion. You can read books on that subject, but they print money and they buy stuff with it. Now, where do they buy it from? Well, they buy it from corporations that are listed on exchanges in the S&P 500, right? Whatever it is that they buy, or, they give it as grants to certain companies that are in the national best interest or whatever. U.S. corporations stand to benefit from the massive increase in government spending. They're going to get paid more money. That means their stocks are going to go up. This is going to really fuel the companies, the economy, and the stock market. So I think that is a little bit of what we're seeing here today. I think that some of that big, beautiful bill passing is getting priced into the market as of right now. They're going to start voting on it this weekend. And through the weekend, they gave themselves a self-imposed deadline of July 3rd. I think that's why we're up. Now, why do I say that? Well, because when investors buy stocks, the good investors, they think about it as being an owner of the company. And they think, well, this company that I own a part of can earn this much money per year, and for that flow of profits, I'd be willing to pay some multiple of that. Like if you were to buy a business that makes $100,000 a year, and that's how it is. You look back at the trailing 12 months, and maybe before then, you're not going to buy it for $1,000. You would love to, but nobody's going to sell it to you for that. They'll sell it for, a couple years worth of that amount. Maybe a few years worth of those earnings. And in investing in the stock market, that is called the PE ratio, the price of the stock to the earnings of the corporation. So right now, the PE ratio of the S&P 500 is 26.3. Now that is historically high, but not like nosebleed historically high, but historically high. If there was not anticipation of stocks being able to make greater earnings in the future, the price would be lower. The P in the P over E ratio would be lower because they wouldn't expect the E to get bigger in the future. The the price is higher because they're expecting earnings to be bigger in the future because of this bill passing. Same goes for their price to book and their cash flow yield as well. All these things indicate that stock prices are higher than they otherwise would be in a typical scenario. The only reason for that is investors expecting higher earnings, and the only reason for that is this massive increase in government spending that would occur if the bill passes. So, what do we do with that information? Well, knowing that some of it is priced in now, and realistically, there's a pretty good chance that it's likely to get priced in more, which means stock prices still going higher leading up into that. When the bill passes, we always get that extra exuberance afterwards, even if it's fully priced in a lot of the time. And so there will probably be a push for a couple of days still higher. It's not unlikely that we make new all-time highs over the next 2 weeks. Then we're going to have to do a whole lot of number crunching. Now, a lot of this is beyond the scope of what the typical investor is able to do. It would require a massive amount of Michael Burry type work where you literally read the bill, which is hundreds of pages these days because of all the pork fat, and figure out what companies stand to benefit the most and how much they might stand to benefit, and buy those stocks and see how that would affect the earnings of said companies going forward. There's going to be a lot of equilibrating is what an economist would call it. There's going to be a lot of equilibrating over the next couple of weeks. And ultimately, within a month or so, that should balance out. And the stocks that stand to benefit will be higher. The ones that don't shouldn't be higher. And then finally, we would probably get somewhat of a pullback, presuming we get the over rational exuberance that we're probably likely to get if and when that bill passes. So that's my assessment on that. I hope that helps. This is Dan Passarelli, Trade Smart.